Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be having a look at what happens to Bitcoin now that we've had the highest ever daily and the weekly close. We'll also continue the theme from last week regarding the potential inverse head and shoulders pattern. I'm also going to go through a particular candle which is very similar to the one that we had on the 5th of December last year and how that conducted the subsequent candles after it. This particular one may well do the same. So we'll have a close examination of this particular candle, which has some particular characteristics. And as per usual, we'll have a look at the wider markets. We'll have a look at the news as well as the 60-day cycle to make head or tail about Bitcoin and where it's heading in the next few weeks and months. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, I'm going to start off with the highest daily and the weekly candle closes for Bitcoin. So this is Sunday's close last night, and this closed at 106,473. So here we are on the daily time frame, and we had this daily close yesterday on the Sunday at 106,473. That is the highest ever daily close for Bitcoin. And if we move to the weekly chart, and because that daily candle was on a Sunday and was the highest close, so therefore the weekly close yesterday was also the highest ever weekly close that we've ever had for Bitcoin. And that is the headlines that we're seeing today, that Bitcoin has notched a record weekly close after the highest ever daily close. But if you look at this particular headlines, it says quite clearly, Bitcoin bulls should be careful with longs as Bitcoin price risks 100,000 breakdown. So I'm going to show you why that is a possibility here. Coming back to the daily time frame for Bitcoin, whilst we've just made the highest daily and the weekly closes, on the daily time frame, what we are getting is a bearish divergence. So we made this higher close here with the price, but on the RSI, we seem to have made a lower high. So we've now got a bearish divergence. Now we know that it doesn't always have to play out. This could quite easily carry on for quite a while. But somewhere along the line, this divergence will play out. And it looks like the current candle here, which seems to be an outside bar, bearish engulfing candle. And of course, it's got more than 12 hours to go yet. But when I do some of the other analysis, you'll see that there is a good probability that we may well just have a little bit of a pullback here. And we'll have a look at some of the levels that it can actually come back down to. So what is this particular candle from the 5th of December, which seems to have raised its ugly head? Okay, so this was the video that I did back on the 9th of December, which was 4 days after this particular long-legged candle was printed. And in this video, I gave you a breakdown of the characteristics of this long-legged candle, of what we can expect with the subsequent candles. So let me play the clip. Interesting candle that we got here, which is this red candle, which is really trying to set the stage for the parameters to the upside and to the downside. This particular candle is called the long-legged doji candle, where you get a long wick at the top and a long wick at the bottom and a little body in the middle. So what this did was to establish the highs and the lows for the range for a period of time, whatever that period is going to be. So I've marked it with these white dotted lines at the bottom of that range and the white dotted line at the top of that range. So that range is 104,000 to the top and 92,000 at the bottom. So what you would expect with this long-legged doji candle, whenever you get this candle, you know that the Bitcoin price is being a little bit naughty. So Bitcoin is on the naughty stool here at the moment. And the main purpose of these long-legged doji candles is to shake out people at the bottom of that trend. So when the price comes back and retests the 92,000, it will shake out a lot of the weak hands who will be thinking that this is now topped out. And at the top end, whenever we reach the 104, this is going to suck in more people fearing that they're going to miss out here. So those two, fear and greed, are going to be in play for a period of time now where we see this consolidation taking place. And this is the power of this particular candle, of how it played out. As I marked it up here with the dotted lines, this is the top of the candle, 104,000, and this was 92. So as expected, the subsequent candles try to shake people out at the top and also shake people out at the bottom. And this was a period of consolidation that this candle had the characteristics of playing out. So this time, this candle obviously played out. It doesn't mean there's a guarantee that this candle will play out, because we know we're in a game of probabilities, and the higher probability was for this to play out on a consolidation basis with a fake out to the upside, a fake out to the downside, and then eventually it would have to make up its decision. And we would have expected at that time for this to have broken to the upside. But what we ended up with was, with the Trump tariffs, the price action played out to the lower side. So what we've got now currently is that similar candle is now playing out here. which everybody seems to have missed out. It still is a very strong candle which will affect the price within its range. And the top of that range here with this candle is at 105,700, which is this bit here. And the lower range of that candle is 100,700. So mark that up with the green lines this time. And a lot of people asking, why did we have this big breakout? And part of the reason was this particular candle, the long-legged candle, is actually playing out very similar to what happened on the 5th of December. And the characteristics, as I mentioned at the time in the video, that once you get this candle, you get a fake out to the top, a fake out to the bottom, and a period of time of consolidation, all conducted by this particular candle. So we saw how it played out in the past, and this is something that's playing out now. So the question is, where do we go from here? We've had this fake out to the top, and it sucked a lot of people in yesterday. And if this candle is going to play out this time as well, then we should get some sort of a return and a pullback to the lower side of that, which is back to the 100,700. And then we have a period of some consolidation, however long that period might be. It could be a week, it could be a few days, it could be many more weeks. But as we look at the 60-day cycle, that'll give us a better framework of how long this can actually last. And then eventually we're going to get some sort of a breakout. And as long as we don't get any seismic macroeconomic news, you would expect the higher probability of this is to break to the upside. And we'll have a look at the 60-day cycle for that when that probability is likely to occur. So really interesting with this candle. Let's see how much of it plays out in the coming days and weeks. Also continuing the theme from last week when I mentioned about the possible inverse head and shoulders which may well develop here, and that was basically on this neckline at the moment at around about the 104,000. So what we've got here is the left shoulder, the head, and the potential of a right shoulder here. So we could have a period of consolidation in the next few weeks, possibly a couple of months, before Bitcoin decides to break out. And as I mentioned last week, it doesn't have to play out, but having had the left shoulder and the head, there is a higher probability of more than 50% that this should play out. And many people asked about the depth of this actual correction here, if it does play out to a inverse head and shoulders. Now, a perfectly symmetrical right shoulder would come down to these levels here at around about 90 to 91. So that would be the perfect right shoulder. However, in terms of classical charting, this can be down to around about a third of that, and a third of that would bring it down to around about these levels here, about 97, 98. So what we would get, if we can get this down to the 97, 98, this would be an acceptable right shoulder. And then the target that we would be looking at, as dictated by this particular pattern, would be from the bottom to the neckline. And please remember, many people use different methods to actually measure this particular pattern. And the way I measure it, and I can only share what I do, as I find this to be the most accurate, but there's other people using different methods, but this is the one that I use. So this would be around about a 40% breakout here, if we do get this right shoulder. And about 42% from the neckline would give us around about 150,000 target. And of course, that could possibly be the top. So please remember, this is this pattern giving us that particular target. And in last week's video, I used the Fibonacci retracement to give you different targets. So different indicators give different targets. And that's why it's always sensible to keep open targets and not to get fixated on one particular figure. And as we've mentioned on this channel many times, the likely end price for Bitcoin is going to be anywhere around about the 150 to 500,000. That's a good ballpark figure for us to have in mind, not any particular fixated specific figure. So according to this particular pattern, if it played out, would be around about 150,000. And then we never know what's going to happen after that. If there's still time to the end of the bull market, then we may get some consolidation and a further breakout to much higher levels. And we'd have to wait and see what happens at that point. So really interesting developments going on with Bitcoin at the moment. And in last week's video, I gave you a particular range which was being dictated to by this liquidation heat map, leverage players with their stops at the high end and at the lower end. And the range I gave you last week was 102,000 at the bottom and 106,000 at the top. And we've seen how accurate this particular indicator has been, that for most of the week, last week, so that was the range between 106,000 and 102,000. So you can see quite clearly that for most of the week, we remain within that particular range. And this is why it's important to have a look at this liquidation heat map. And in the private membership and the daily updates that we do there, Monday to Friday, we mention the liquidity heat map very regularly because it gives us an accurate picture of what's going on during the week. And that range has proved very accurate and gives us some sort of an insight of where Bitcoin is potentially going to be over the coming 24 to 48 hours. The liquidation heat map changes as obviously the leverage players put their stops in. So at the moment, there aren't many stops at the bottom, so there isn't much of a range apart from this developing yellow line here at 102.2 thousand, and at the top end the range is at 107.5 thousand. So this is the range that we would be expecting over the coming days. The last lower range was this one here at 102.8 thousand, and this is exactly where it come back down to. From all the way up here at 107,000, it came all the way down to 102,000. So you can see how accurate this range is and why it's very important to keep an eye on this. And if we have a look at Bitcoin through the framework of the 60-day cycle, this again gives us a very good insight and a clue as to what may possibly happen over the coming weeks. And that is, so currently we are on day 42 of the current cycle. This is today, Monday, from the bottom at 74,000. On the 7th of April. Now we were expecting some sort of a mid-cycle, this is a white line here, in between the start of the cycle, the red line here and the red line at this point in the first week of June. So we're expecting this cycle to finish in the first week of June. The mid-cycle is here, the first week of May, and we were expecting some sort of a pullback. Now we got a little bit of a pullback here, but we would have expected something deeper, but that didn't occur. And so the focus shifted up here, and we got a little bit of a pullback here as well, but not to the extent that you would have expected with these mid-cycle pullbacks. It gets a little bit more substantial like this one and like this one here, which obviously reflects the bullish nature of Bitcoin. But also if you take the rally from the 74,000 that we got as part of the Liberation Day pullback that we got down to 74,000, then so far up to yesterday, we've had a 43% rally. And you would expect some sort of a consolidation. And as we saw with that long-legged candle, there seems to be more pressure to the downside. So on a balance of probabilities, we probably are going to get more of the consolidation here. But having said that, being on day 42, before we get the pullback into the end of the cycle that we get, there is this window of opportunity, which I thought yesterday Bitcoin was trying to take that opportunity to go and retest this 109,000, and it only reached up to 107,000. So there is still this opportunity here between day 40 and day 50, which is where you would expect the big move to occur. So still look out for that. I wouldn't be surprised if we do get up to 109, but the balance of probabilities would tell you that it's more likely to go sideways. And if it does do that into the end of the cycle, then Bitcoin is set up nicely to really retest that 109 and to actually make much higher moves for the new all-time highs. So lots of interesting and exciting developments going on with Bitcoin at the moment. And I also want to bring something to your attention, because on the Bitcoin miners, which I know many of you actually take an interest in with our portfolios, etc., just last month we got this bullish signal on the monthly time frame, and this was only the third one over the last 8 years, and the majority of them have played out very well to the upside. If we go back here, the first time we got these signals were back in 2015 when Marathon Digital Holdings went up by 177%. This one wasn't very big. This was only about 58%. And this one here was 1,900%. And we should have really got one here at the end of the last cycle, but we didn't get a signal here. But the last one that we got was back in 2022 at the end of the bear market. And we did get a big move there of around about 260%. So we got this signal triggered in April, and we're now just about starting to move to the upside. And unfortunately, most people tend to join the Bitcoin miners when they've had a big move to the upside, and then they end up riding it down, whereas the right time to get on board the Bitcoin miners, if that is what you're inclined to do. But always remember, the Bitcoin miners are an incredibly volatile space. It really is the classical high risk, high reward. So just to give you an example of this, the current pullback we got was from November down to here in April. So in 5 months, this went down by well over 67%. And we've had plenty of these pullbacks, another one here, down another 60% here. And this was the other third one that we've had. Over the last 2.5 years, we've had 3 large pullbacks of around about 60+% from the bottom of the bear market. So the secret is to get in at the bottom like we are currently at the moment, because then you would be riding it up. So just like we've had pullbacks of 60%, we've also had rallies all the way from here. The first big rally we got was 537% back in 2023. And then we had another one here of 370%. And the last one was here at 130%. So the secret really is to try and get in at the bottom. But sadly, the experience is that when these have gone up to these levels, this is where people will join, and this is when it's ripe for a pullback. And the fact of the matter is, currently, from the bottom at the end of 2022, we are making the higher lows and the higher highs. So the trajectory for the miners, as represented by Marathon Digital Holdings here, is to the upside. And obviously, as mentioned many times, there's no guarantees or certainties. This is a game of probabilities. And of course, people don't need to be invested with the Bitcoin miners. So for those people who have thought about joining the private member section, even though they're not interested in the Bitcoin miners, they may be interested in getting 2 extra videos which cover both Bitcoin and the Bitcoin miners in more detail, as well as the market updates that we do to keep our focus on a daily basis. So you can see that we do a daily update here, Monday to Friday, with exactly what's going on, so we can keep our focus and not get distracted. And of course, we do the portfolios here. We have the trading portfolio, which is currently up at 455,000 from the original 100,000 invested, and the passive portfolio is at 353,000. So you can see the difference, the ratio trades that we do with the trading portfolio as opposed to the passive one where we've left it alone completely from the beginning of 2024. And these are some of the ratio trades that we've done. We're currently in this particular one here between Marathon and Iris Energy, which is up around about 15% at the moment with a little bit more to go. And these are the results we've had so far. These are the profits and losses. The blue figures are all the profits we've had, about 40 trades altogether, and we've had a few in the red as well. So there's no guarantee that these ratio trades are all going to play out in our favor, but on the whole, we've done really well with the ratio trades. So if you're interested in 2 videos a week covering Bitcoin and the Bitcoin miners and the market updates, and want to follow our portfolios as well with the ratio trades, then all you have to do is go to the bottom of my videos. There's a join button here, as well as in the description box, there's a red box here. When you click on that, you'll get this box. And for the price of a coffee per week, which is $12.99 per month, you'll be able to join the private member section. Okay, we're going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.